SBA, it's not a shortcut. It's the scalpel. If you're not precise with how you use it, you're going to bleed out. You ever ask the internet how to fund your small business? Go give it a shot. Try it. Anywhere. From Reddit, TikTok, Facebook, you'll get hit with the same golden advice. That is, just get an SBA loan. It's like it's some type of cheat code or a one-size-fits-all.
What?
A government-backed money printer. But here's the truth. If you don't understand how the SBA really works, you're not just going to be disappointed, you're going to waste months chasing something that never built for your business in the first place. And I see it happen all the time. I'm Shane Pearson. I'm a small business lender, a podcast host, and what I'd like to call a deal alchemist. I've been helping entrepreneurs finance their dreams for almost 20 years now. And if you're serious about buying a business or scaling one, or just getting capital that actually helps you grow, you're in the right place. I host the Lords of Lending podcast with my partners, Stephanie Dunn and Brian Congealier. And this channel is where we break down real-world strategies for small business owners, not just hypes and sound bites. My job is to help you get funded without getting burned. So hit the subscribe button, drop a like down below, and let's clear up the noise about SBA once and for all. Here's the first and easily the most common misunderstanding that I hear about SBA loans, and that is the SBA is the one giving me the loan. Stop you there. Nope, it's not even close. The SBA doesn't actually lend money in the traditional format. They have subgroups called the EIDL that does some of that out there. If you were going through COVID, you know what I'm talking about. The majority of all of the programs that exist in the market today, the SBA is not the one lending the money. They actually guarantee the money, similar to an insurance policy for a bank. So there's the difference. Let me break it down for you like this. Imagine you go to a bank, and the bank says, "We like your deal, but we're a little nervous." It happens pretty commonly. So the SBA steps in, not to just hand a check over, but to say, if you follow our rules and this deal goes sideways, Mr. Bank, we'll cover 75 to 85% of the loss. That's really it. That's what the SBA does.
Interesting.
So they're not your lender. They're not the lender's insurance policy. The money, it still is coming from the bank or the non-bank lender. That lender still has to underwrite your deal, ask you for your documents. They got to run your credit and make a decision, just like any other loan. But really, the advantage is that the SBA guarantee gives the lender more confidence to say yes to you. Maybe they normally wouldn't fund a business acquisition with heavy goodwill or no business value underneath it. But because they've got that SBA parachute, they take the risk. And here is where it gets even more real. Not all SBA lenders see your deal the same exact way. Some are more aggressive. They lean in. They're deal makers. They want to find ways to creatively make it work.
I'm going to make him an offer he can't refuse.
Others are safe. They are conservative. They have a different investment profile in what they want to invest in and lend their money to. So they follow the letter of the SOP like it's scripture or doctrine, almost like a religion to them.
It's all there, black and white, clear as crystal.
But you could send the same exact package to 5 different SBA lenders and get 5 completely different answers. So if you walk in thinking that the government is going to fund your dream correctly, you're going to be disappointed very, very fast. What the SBA actually gives you is access, not money. Access to lenders who otherwise might say no, but you still have to earn the yes and pick the right team to help you get it. That's a key component. Now, let's talk about speed, because this myth does damage to people trying to get SBA debt. There's this idea floating around, especially on social media, that SBA loans can be quick. Granted, quick is a relative term based on how desperate you are for the cash. But they even say it's like one click, Amazon Prime for capital. I'm here to tell you that ain't it.
I'm so sorry.
You'll get through some lenders for some money, and it might go a little faster than others, but if someone promises you funding in a week, you're either dealing with someone who has no idea how it works or someone who doesn't care if they waste your time. So even in the best case scenario with a buttoned-up borrower and a streamlined team, it takes weeks, not days. So if real estate is involved, add even more time. If you're buying a business, expect more back and forth. If there's seller financing, tax complexity, or a third-party report's needed in this, business valuation, appraisal, anything else, now you're talking 60 to 90 days, sometimes more. And look, I get it. The paperwork is super heavy, very frustrating. There's tax returns, there's personal financial statements, there's business plans, projections, environmental reports, appraisals, debt schedules. It's a heavy, heavy haul.
I'm tired, boss.
But you know what else it is? It's a real loan with real power, low rates, longer repayment terms, the use of funds that go way beyond what other traditional lenders allow. And in many cases, structures that actually help you grow without giving up all of your equity or over leveraging your cash flow. So yeah, honestly, it does take a lot of work, but if you're serious and you're prepared, it's worth it. This is not fast money, it's the right money. So if you're expecting a credit card application and a 48-hour approval, you're probably in the wrong lane. But if you're building something real, you want this kind of loan. You just have to earn it. Now let's clear up another half-truth that floats around like gospel out there. You've probably seen it online. Someone says, I need $150,000 for new equipment. What's the best way to get it? And instantly 10 replies, SBA loan, SBA loan, SBA loan. Like it's the only right answer. And don't get me wrong, SBA loans are very powerful, and I've built an entire career on helping small business owners use them to scale and buy businesses.
Like a boss.
But that doesn't mean that they're always the best option. In fact, I often tell people it isn't. I just did it today. Sometimes they're not even in the top 3. So if you've got a strong relationship with the local bank, and if you've been with them for years and your financials are clean, that bank might offer you a quicker, cheaper, and less complicated deal, especially for things like equipment financing or simple working capital. I've seen manufacturers offer better terms on machinery than an SBA lender could because they know the asset and they can move fast, and they've tried to close the sale. So I've also seen credit unions and regional banks extend a revolving line of credit that fits better and more like a glove with no SBA needed.
Like a glove?
So no, the SBA isn't the cheapest. It isn't always the fastest. It isn't always the smoothest. It's a tool, a damn good one when you're used in the right situation. But it's not a blanket solution for every capital need, and I can't tell you how many people spend most of their day trying to jam a square peg into a round hole. This is where strategy matters. You can't just ask, what worked for that guy on YouTube? You have to ask, what works best for my business, my cash flow, my growth stage? Because when you get clear on your goals, the right capital becomes obvious. And sometimes it's SBA, sometimes it's not. Now here's the one that I've heard repeated so many times it makes me want to slam my laptop shut and maybe throw it across the room because I get a little bit frustrated with it.
It may push some buttons.
Oh, SBA loans? Yeah, that's what you apply for when no other bank will touch you. This is where you're wrong. The mindset is not only false, it's actually dangerous because it makes good bankable entrepreneurs ignore a loan that could be their best move. SBA loans are not just some last resort tool for desperate owners trying to stay afloat. They're often the first choice for smart strategic operators who want flexibility and strength in their capital stack. So I've worked with dozens of profitable growing businesses that chose SBA because they were acquiring another company and needed to finance goodwill. Or they are buying out a partner and wanted to avoid draining all of their cash. Or they needed to consolidate expensive short-term debt without suffocating their cash flow. Those businesses weren't distressed. They were scaling and needed a structure that made sense. Traditional lenders don't love things like goodwill. They don't love that blue sky, non-asset, physical stuff you could touch. They don't always fund partner buyouts. They often won't roll working capital in or closing costs and acquisition funds into one clean little loan. But SBA, that's where it shines. It's not a backup plan, and for a lot of business owners, it is the plan. You don't need to be struggling to use SBA. You need to be strategic. If you've got a profitable business, clean books, and a real use of funds that moves the needle, SBA could be your best shot at making it happen without giving away equity or signing your life away to private debt. Now let me tell you about the trap that even gets the savvy operators stuck. Thinking that once you've decided to get an SBA loan, that it doesn't matter who you go with. That every lender is just a plug-and-play version of the same rule book. Couldn't be further from the truth. On paper, yes, SBA lenders all follow the same standard operating procedures. They call it the SOP. It's kind of like the Bible for most small business lenders. But how they interpret those rules, that's where the game is played. So some lenders are more aggressive and they specialize in acquisitions, roll-ups, cash flow deals. Others are more conservative and they only want clean, asset-backed transactions, things with real estate. Some will get very creative and like using seller financing to reduce your down payment. Others will flat out tell you, we don't do that here. And don't even get me started on timelines. I've worked with lenders who can close a deal in about 5 weeks, and I've seen others sit on documents for 3 months while the buyer and seller wither away in deal fatigue.
What is she doing? I never know what she's doing back there.
So no, you're not just picking up a loan program, you're picking up a team, a system, a process. You're picking the difference between closing the deal and watching it die on the vine. If you're taking nothing else away from this video, hear this. Don't just ask, do they offer it? Ask, What kind of deals do they specialize in? How fast do they close? Can they show me recent closings like mine? Do they actually ever communicate? Because a great lender makes this hard process feel doable. A bad one will make it feel like you're trying to finance your business through the DMV. So now that we've punched through all the noise, all the myths and the hype and half-truths floating around out there, let's talk about what's actually true. Because when you cut through all the misunderstanding, what you're left with is actually power. The SBA loan is an absolute beast of a tool, but only when you know how and when to use it.
Remember, with great power comes great responsibility.
It's not for flipping houses. It's not for Hail Mary passes on failing businesses. Can't tell you how many of those I see. It's not a quick win or a band-aid for broken cash flow. SBA works when you've got a real plan, a business with cash flow, a strategy to grow, a need for long-term capital that fits the next decade of your journey, not just the next 90 days. This is where the SBA loan shines. You're buying a business and you want time to stabilize operations, improve margins, and grow into it. A 10-year term at a reasonable rate gives you the runway to make that happen. You're consolidating high-interest debt and you need to free up cash flow. SBA helps you breathe so you can operate with margin instead of chaos. You want to buy out that cranky partner, the guy that won't let you grow.
Progress. Flibbity, flabbity, floobity, flubberfish.
Or acquire another company. Or invest in an expansion without giving up all your equity. SBA can make that possible. It lets you roll multiple needs into one structured, fixed payment solution. It gives you flexibility that almost no other loan product offers. You can finance goodwill. You can finance include working capital. You can roll in closing costs. You can stack multiple uses. Try getting that from a traditional bank line. I'm telling you, try doing that with a fintech loan with a 12-month balloon and 30% interest rate. You won't, because those loans aren't built for growth. They're built for short-term access, and SBA is different. It's engineered for business owners who are ready to play the long game, but need the right structure to pull it off. But this part matters just as much. SBA is not the answer for everybody. If your business is bleeding cash and you think a loan will fix it, SBA is definitely not your lifeline. If your financials are a mess and you don't know what you need money for, you're not ready yet. If you're hoping money will solve problems you haven't solved operationally, no lender, not even the SBA, can save you from that. This loan isn't a shortcut. It's a tool, a serious tool for disciplined operators who want to move big levers. People who can back up their story with data, who can present a deal that actually makes sense, who are ready to make smart moves with serious capital. And if that's you, and I'm telling you, SBA can absolutely change your game. Okay, look, I've sat across the table from owners on a verge of burnout because they chase the wrong funding path with the wrong people. And somehow I've got to save the day.
Look, up in the sky, it's a bird.
It's a plane.
It's Superman. Yes, it's Superman.
I've seen deals fall apart because no one explained the timeline. No expectations were set on really what this is all about because a lender dropped the ball, because the borrower didn't know what they were walking into. You're not just buying money, you're buying process. Choose the wrong lender and the deal dies, no matter how good you look on paper. But I'm telling you, I've seen what happens when it all lines up. When the deal is tight, the packaging is smart, the use of funds is clear, the lender knows how to execute. That's when the SBA becomes a weapon, not a burden. And that's why I do what I do, in all honesty. That's why I'm on this channel. That's why I host Lords of Lending, because I want small business owners to be real builders and win.
Let's go.
So if you're serious about scaling or buying a business or setting up a capital strategy that actually fits your goals, subscribe to this channel, check out the podcast, grab the free resources over from lordsoflending.com, and join the community of other owners who are done guessing and ready to build with clarity. And if you've got questions, drop them in the comments. I read them. I promise I'll respond.
Be nice.
This isn't a funnel, it's a conversation. I'm Shane Pearson, the Deal Alchemist. This has been real, maybe a little nerdy.
Did I do that?
But if you're still listening, you're the kind of operator I want in my corner. So let's get your deal done and let's build something durable. Cut through that noise, that crap together, and I'll see you in the next video.